If you remember, bounce back loans were given out during the sort of height of the pandemic to help businesses through. They were given out really quickly, so the money went straight into the companies, which was a great relief for a lot of people. They were up to £50,000 and there was no repayments and no interest for the first year, and then you had to repay it over the following 5 years with a small interest rate. They were government guaranteed, but they were self-certified when you asked for the money. There were a whole load of conditions when you took out your bounce back loan, and it's one of those little tick boxes where you tick yes, 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 and often when you tick those little boxes, they do it quite quickly, but it was support and control, and it was basically the main control because the banks would flow you through their systems with incredible speed, so the bounce back loan could be with you the next day. And an awful lot of people took out these bounce back loans, and now we're sort of more or less halfway through to the repayment, and that's the boring bit. And of course, if you can't make the repayments, it's a difficult and trying bit as well as a boring bit. The repayments are up to about £1,000 a month, which a lot of businesses can afford, but some just can't. So we need to just think about what happens if you can't repay your loan, because they're government guaranteed, but the money is given to you by the bank. So what happens if you can't pay the bank tries to enforce it, they can't enforce it, there's no personal guarantee. So then the bank goes to the government and says, well, you guaranteed this loan, and then the government has to give the money back to the bank. But when they do that, the government is making sure, they know that there's a huge potential liability for this, so they are being serious about it. So they are checking that you complied with the initial stuff and that the bank has properly asked for the money. So remember, these were more or less self-certified. If you did the self-certified and you know that you haven't done it correctly, I can only advise you to take advice and try and make amends. But it's much more important if you can't repay, because it will definitely be checked, because it's actually part of the process, and we now have precedent to know that that is what they're doing. The biggest things really that people are falling foul of is sometimes people ask for more than one bounce back loan. Well, they shouldn't have done that. Sometimes people ask for a bounce back loan that was bigger than they should have done, because although the limit was 50,000, it was also limited to a quarter of your annual turnover. So they may have taken out more than they should. The other thing, it was supposed to be to help your business go forward, that your business wasn't struggling before the pandemic. So that's probably, that might be okay, but for some businesses it's not. But it was for your business. Now, the way that a lot of directors pay themselves is that they pay a small salary and then they pay dividends. And the bounce back loan should not be to maintain the lifestyle of the directors. So if instead of taking a dividend, in your normal dividend, you took the money out of the company, either as a director's loan or in some other way, then that is a problem. And it will normally manifest itself, not always, but normally manifests itself in an overdrawn director's loan account where the director owes money to the company. Now, if that is the case, then obviously director owes the money to the company, and then the company owes money to the bank, and the bank has a guarantee from the government. There's quite a lot of penalties involved, aren't there? But if you cut through that, the director owes the money to the government, and I think they're very likely to enforce that, and they're likely to enforce it even if you stop trading and it's struck off at company's house, or all the other tricks that you can do. And I would strongly suggest that if you are struggling to repay, then you seek advice. We friendly first call, but really you need insolvency advice, who can see the precedents, how the government has behaved. And in particular, if they don't think you've behaved properly, and asking for a bounce back loan incorrectly is definitely not treating it properly, then if you've not done things properly, they can bar you from being a director in the future, 5-10 years, who knows. And if you've really mucked them around, people have gone to prison for this, so it is serious. So if you can't pay your bounce back loan back, then I would ask you to really seek some help and some advice. If you've taken it out incorrectly, you should also make amends on that. I would also advise you to do that. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, please subscribe to the channel, and if you press the like button, it helps me in the channel, so thank you.